We're in the first week of December 2022, which means the November numbers are out, so we can analyze what in the world's actually going on in the market instead of just listening to the headlines. Let's dig into the stats a little bit, find out if it's a good time to sell, is it a good time to buy, and without further ado, let's just jump right into the numbers. So let's start where we always do, and that's on the closed price, because at the end of the day, that's what you want to know. Is your house value going up or down? And once again, we ticked down. April 2022 was top of the market here in Denver Metro, 600,000 on average. Now we're sitting at about 540,000. But once again, as you know, these numbers can be skewed for sure because more expensive homes tend to sell during the summer months. So it doesn't always accurately represent the exact sold price. Now, new listings to hit the market. This is what is fascinating to me. We just keep going down and down and down. We had 4,200 new listings hit the market in November. Now, when we look at this chart going back, it looks like, okay, that's pretty typically the trend. And we'll go back from the maximum timeline. However, here's what's just a touch different. We hit this very low part in November 2022. We still have all of December still left, folks, to see how many properties are going to come on the market. But every year in the past, December 2021, we had 4,000 units come live to the market. November 2022, 4,200, so just about the same. The year before that, December was the low. Year before that, December was the low. December was the low. Like every year, like clockwork, December is the lowest month of new listings getting added. So as long as we keep up on this trend, still, we're going to have incredibly low amounts of inventory coming over this next 30 days. Now, coming over here to the amount of active listings. September was about the peak for active listings of this year, and this number has steadily declined. So even though we're way down in closings still, we'll show you that here in a second, the amount of listings on the market is declining as well because no one's putting their house up for sale. The amount of pending listings, this number is low. Interest rates have been ticking down a little bit, which we did see some better activity over the last few weeks because of that. However, the amount that are going under contract is very low. 4,200 to go under contract in the month of November. And if we spread out this timeline, we can see it's very cyclical, but that amount of closings is getting low. So if December is even lower, we might be back here at 2016, 2015 levels of the amount of closings happening. And then here we are, the closed listings. We peaked out this year in May at about 8,400 closed, and we're down here 4,600 closed in the month of November. Now, that's not that abnormal, so don't let that, freak you out or anything. It's low. It's low in comparison to last year and previous years, but we can see when we zoom this chart out, going back 15 years, January, February are typically the lowest closing months. December, November are quite a bit better. So for the next few months, expect closings to drop even further. It may feel like a ghost town out there. If you're on the listing side, you're going to be selling your house. Expect it to take a while to sell your property to get people through the door. Days in MLS just keeps climbing. Right now we're at 22 days on average, average 60 to 90 days in most markets over the span of the last 100 years or so. So nothing really too out of the ordinary there. We're going up on days on market. The market's shifting. Month supply of inventory, though, we just keep dropping. We're down to 1.8 months of inventory. Normal is anywhere from 4 to 6 months supply of inventory. So if no one's putting their house on the market and we're still selling houses, period, we're just going to keep decreasing on the amount of inventory we have. These are two interesting numbers to take a look at if you're on the sell side. So on average, it's taking 10 showings for a property to go under contract. So if you've had more than 10 showings, maybe you're overpriced. And then we can look here, showings per listing is 4.9. So what does that mean to me? Well, if on average, each property is getting 4.9, we'll call it 5 showings per month, and is taking 10 showings to go under contract right now, the expectation is it might take 60 days for your property to sell. Now, I get it. We're in Denver. We are in one of the best cities in the world, so we're insulated a little bit from what the rest of the market might be doing. But let's open this up a little bit. Let's take a look nationally at what's going on with the housing market statistics, because all the headlines you're reading out there are nothing but doom and gloom, and we're going to have the worst crash that we've ever had. And oh my gosh, it just gets a little bit overwhelming. Everyone wants to be the predictor of shit hitting the fan. And I just don't quite get it. Is it that they want to look smart? Because if you look at the track record of anybody, even Michael Burry, if you look at his track record on what he predicts, it's not great. He just happened to get it right. He held on way longer to his short position than anybody else would have, and he got a lot of flack for it. He just happened to be right that one time, and now he's a household name for calling market predictions. But go back in time and look at his stuff, and he doesn't have the best track record for predicting things. No one does. Now, nationwide, let's take a look at this, right? We'll look at the same statistics that we looked at for the Denver metro area. So starting with the closed price nationally, we can still see we're up from last year. 357,000 is the national median sales price, down from about 391. So we're still down 10% all across the nation is what these numbers are telling me. If we look at the amount of new listings to hit the market, well, wouldn't you know, it's painting the exact same picture. This black line is 2022, and we are having less new listings hit the market this year all across the nation than we have in previous years. The amount of active listings here, once again, 2022 is this black line. We definitely are up about 12-13% year over year for active listings. But I mean, we're looking back here at all the way at 2019, where we had 1.15 active listings at this time a few years ago. And this time we've got 826,000. So people just aren't selling still. The amount of homes sold. So this is closed deals. This is the big number that's driving all the headlines out there, because it's such an easy number to make it seem like, oh my God, no one's buying a house, because from previous years, we're down 30%, as you can see. So it looks really bad on paper, but at the same time, no one's selling their house either. So I don't know, they just kind of line up to each other. Nothing is super red flaggy to me yet. Days on market is the next thing we look at. So we're looking nationwide about 35 days on the market, which is still less than 2019, just happened to be more than 2020 and 2021, which were really bizarre years. Month supply of inventory has finally ticked over 2019 years, and we've got roughly 4 months supply of inventory nationwide. So we're literally just getting into that balance zone right now, nationwide inventory wise. And there's your breakdown of what the numbers are saying, what the market is doing. Now, I'm no fool. There's a different feeling that we have versus what the numbers are definitely saying. But how much of that is actually driven by what the mass media is saying out there? So once again, I'm still on the fence on what in the heck is going to happen. I don't know if the whole market is just going to implode. Everybody's saying that. And once again, I'll reiterate it. When everybody is saying it, I know one thing to be true is that very often doesn't happen, because there's too many people prepared for it. And that's a big thing that I wanted to focus on for a moment, is preparedness. I just know that a lot of people are prepared for any sort of market correction. Now, granted, I'm in the real estate space. I talk to dozens of people a day about what their opinions on what the market is doing. However, I'm going to ask you if you know anybody in your life that owns multiple properties, right? That is heavily in the investing world. Ask them what they think of it and how prepared they are for a downturn. What you're going to find is that most people are actually really prepared for a downturn. So there's a lot of cash sitting on the sidelines ready to move once things start to shift. And what I've seen in my own business, because I work with a lot of investors, a lot of landlords, a lot of house flippers, is that they're starting to deploy a little bit of cash. We're seeing stuff sell at 10% below market. We're seeing houses on the market in that 300 to 400 zone taking offers 50 grand plus below their asking price. So even if the market does turn another 15 to 20%, some of the deals that we're getting still even make sense to start acquiring now. Too many people are on the sidelines expecting, anticipating something to happen and being ready to step on in and deploy their cash when that happens. And so because of that, I just don't really know if it's going to happen like we think it's going to. The thing is with 2008 and what everybody's comparing to is that nobody was prepared for 2008 and what happened. And so because that happened just 14 years ago, I just think it's too soon in our memories to be able to happen again in the same manner that it happened before. Now, yeah, the market might continue to go down. And really, I think March and April are going to be the telltale signs of what we're in store for. So I would say if you are on the fence, if you are needing to sell, now might be a good time to do it. In the event that we continue to slip down because inventory really starts to ramp up in about the middle of May. So you're going to want to beat those sellers to the market. If you're in the market to buy, sellers are giving big concessions. We're talking $25,000 seller concessions to buy your rate down so you can get in at 4%, 4.5% interest rate, at least for the first year, and 5.5% interest for the second year. So it's making it more affordable for you on the monthly front. So there you have it. There's our November wrap up of what the numbers are doing. And until the next time, happy housing.